Ever pondered which trading strategy might be the most fitting for you? Well, you're not alone. It's a question that has intrigued many, from the greenest of novices to the most seasoned of investors. Today, we're going to delve into the world of trading strategies, uncovering their unique characteristics and exploring how they can help you reach your financial milestones. We'll be covering 4 main strategies. First up, we have day trading, the fast-paced world of buying and selling within a single trading day. Next, we'll discuss swing trading, where trades last from a couple of days to a few weeks. Then, we'll move on to position trading, a more medium-term strategy that can last for weeks to months. And finally, we'll delve into long-term investing, which is all about holding on to assets for years, even decades. So, are you ready to navigate the financial seas with us? Stay tuned to find out more about each of these strategies and how they might fit your trading goals. First up, we have day trading, a strategy perfect for those who love action. Now, what exactly is day trading? Simply put, it's a style of trading where all positions are closed out within the same day they are opened. No trades are held overnight, meaning you start each morning with a clean slate. Sounds thrilling, right? The main advantage of day trading is the potential for fast profits. Since the markets can move quickly, there are opportunities to make substantial gains within minutes or hours. However, it's not all sunshine and roses. The flip side to these quick profits is the risk of swift losses. Day trading is like a double-edged sword, you see. This trading strategy requires an in-depth understanding of market trends and the ability to make quick decisions. It's a high-stakes, high-reward game that can be exciting and nerve-wracking at the same time. It's not for the faint-hearted or those who prefer to take things slow. In terms of risk, day trading is considered one of the riskiest trading strategies. It's not just about the monetary risk, but also the psychological toll it can take. The stress of constantly watching the markets and making quick decisions can be overwhelming for some. That's why it's crucial to have a well-thought-out trading plan and stick to it. Discipline is key here. So, who does day trading suit best? Well, it's ideal for individuals who can devote their entire day to trading. It requires constant monitoring of price movements and market news. Also, those who thrive under pressure and can make quick decisions are well suited to this style of trading. In addition, day trading requires a significant amount of starting capital. Unlike long-term investing, where you can start with a small amount and let it grow over time, day trading requires a substantial initial investment. This is because the profits and losses are determined by the size of your trades. In conclusion, day trading is a high-risk, high-reward strategy that suits active traders who can devote time, money, and mental energy to the markets. It's a strategy that requires discipline, quick decision-making, and a substantial initial investment. If fast-paced trading excites you, day trading might be your game. Next, we have swing trading, ideal for those who can wait for the perfect opportunity. Swing trading, as the name suggests, is all about taking advantage of the swing or the fluctuation in stock prices. It's a strategy that falls somewhere between day trading and long-term investing, typically holding onto a position for several days to several weeks. Now, let's dive into the details. Swing traders primarily use technical analysis, looking at price patterns and trends on stock charts. They're not so concerned with a company's fundamentals, but focus more on market sentiment and momentum. It's like surfing, but instead of riding waves on the ocean, you're riding waves of stock market prices. What makes swing trading appealing? Well, it's less time-intensive than day trading. You don't need to be glued to your screen all day, making it a good option for those with a day job or other commitments. Plus, it allows for potentially larger profits than day trading, as you're giving trades more time to develop. But like any strategy, swing trading is not without its risks. It requires a thorough understanding of technical analysis and a keen eye for market trends. It also demands patience and discipline to wait for the right trading setup and to stick to your trading plan. One of the biggest challenges of swing trading is dealing with overnight and weekend market risk. Since positions are held for more than a day, they're susceptible to events that happen when the market is closed. A sudden news event, for example, can cause a significant gap up or down in a stock's price. So, who does swing trading suit best? It's a great fit for traders who can afford to take on a bit more risk than day traders, have the patience to wait for their trades to play out, and possess the analytical skills to identify potential swing trading opportunities. If you have the patience to wait for the market to swing in your favor, swing trading could be your strategy. Now let's discuss position trading, a strategy for those who like to play the long game. Position trading is a type of trading that involves holding onto a position in a security for a substantial period, often weeks, months, or even years. The key premise of this strategy is to capitalize on major price movements, which typically occur over a longer time frame. The focus here isn't on short-term market fluctuations, but rather on the bigger picture. Position traders typically rely on fundamental analysis, studying economic indicators, company health, and market conditions to make their investment decisions. They're not concerned with minor price movements or daily market news. Instead, they're looking for significant economic shifts that can influence the price of a security over a long period. Now let's discuss some pros and cons of position trading. On the upside, this strategy requires less time and attention compared to day or swing trading. You don't need to monitor the markets every second, and it's less stressful as you're not making quick, frequent trades. However, on the flip side, position trading involves a higher level of risk. This is because you're holding on to your positions for an extended period, exposing your investments to potential downturns in the market. Moreover, it requires substantial initial capital, as you're expected to weather any short-term losses. So, who does position trading suit best? It's ideal for patient individuals who have a good understanding of market trends and economic indicators. If you're someone who doesn't mind waiting for returns, and you have the capacity to absorb potential losses, position trading could be a good fit. Remember, no trading strategy is foolproof. It's all about understanding your risk tolerance, financial goals, and the level of involvement you want in the markets. If you prefer analyzing and predicting long-term market trends, position trading might be the way to go. Finally, we have long-term investing, a strategy for those who believe in buy and hold. This is more than just a catchy phrase. It is a philosophy rooted in the belief that markets are efficient over time and that patience will be rewarded. Let's delve a bit deeper. Long-term investing is essentially buying a security and holding it for an extended period, typically years or even decades. This strategy is based on the concept that in the long run, financial markets give a good rate of return despite periods of volatility or decline. Now, what are the pros and cons of this strategy? On the upside, long-term investing can be less stressful as you don't need to constantly monitor the market. It allows you to ride out market fluctuations and doesn't require the precision timing that other strategies demand. But it's not all sunshine and rainbows. One of the main disadvantages is that your money is tied up for a long period, making it less accessible for other financial needs. It also requires a high level of patience and trust in your chosen investments. The level of risk in long-term investing can be moderated by diversification. That is, spreading your investments across different types of securities. This approach reduces the impact of any single investment performing poorly. So, who is this strategy best suited for? Well, long-term investing is a good fit for those who are patient and willing to wait for their investments to grow over time. It's ideal for people who have a long-term financial goal, such as saving for retirement or a child's education. It's also well-suited for those who prefer to avoid the daily ups and downs of the market and don't want the stress of making frequent trading decisions. If you believe in the power of compounding and have a long-term financial goal, long-term investing might be your best bet. Now that you know about these trading strategies, it's time to choose the one that fits you best. We've journeyed through the dynamic world of day trading with its fast-paced, high-stakes environment. We've explored swing trading, where the focus is on seizing short-term opportunities and capitalizing on market fluctuations. We've delved into the realm of position trading, a strategy for those with patience, willing to wait for substantial gains over time. And finally, we've considered long-term investing, a strategy for those who believe in the power of compounding and the stability of blue-chip stocks. Each strategy carries its unique risks and rewards, and the choice ultimately depends on your personal goals, risk tolerance, and time commitment. Remember, the right strategy is the one that aligns with your individual circumstances and investment objectives. Don't forget to subscribe and give a thumbs up if you found this video helpful. Happy trading!